dollar yen has been gradually moving higher and we've topped out near 40-year highs. The Bank of Japan has come in and sold dollar yen aggressively. $38 billion worth apparently gone into the market on Thursday. We've seen several rounds of intervention. This is the biggest, and it has been confirmed since that the Federal Reserve Bank of New York came in and sold euro yen. How much more powder do the Bank of Japan and maybe the Fed have to intervene further in the market? Hello and welcome to ATFX's yen update. Well, thanks for joining us again. Dollar yen has seen huge intervention over the last couple of days. As we all know, dollar yen has been gradually moving higher over the last several months, and we've topped out near 40-year highs, literally a couple of pips underneath 164 the figure. The Bank of Japan has come in and sold dollar yen aggressively. We've seen some huge moves from the downside. There have been a couple of separate instances. So we saw big intervention on Thursday in the New York session from the Bank of Japan. We also heard that the Fed were checking rates. On Friday, we saw more intervention in dollar yen from the Bank of Japan, and it has been confirmed since that the Federal Reserve Bank of New York came in and sold euro yen. So we've got some big moves. Yen has naturally appreciated against these moves. The question for all of us now in the market is, where does it go from here? How much more powder do the Bank of Japan and maybe the Fed have to intervene further in the market? We know why the Bank of Japan's come in. They've been talking about it. We've seen several rounds of intervention over the course of this year. This is the biggest, or it's had the biggest impact. $38 billion worth apparently gone into the market on Thursday. We're not sure on the numbers from Friday, but certainly Treasury Secretary Scott Bessent had a little note that he was happy to show the world that he was going to throw 5 to 10 billion euros at the market, apparently. So interesting goings on both from the financial side of things and probably from the political side of things as well. One of the reasons has been touted that the Fed have come in as help because Japan is the biggest holder of US Treasuries. If they wanted to release some funds to do more intervention, they'd have to sell US Treasuries. Yields are at multi-year highs. The longer date yields are at multi-year highs. 10-year hit, I think, a 3-year high the other day. So one of the reasons the Fed might want to help out is they don't want to see US Treasuries hit any harder at the moment as well. So plenty going on. What happens now, no one knows. If we go back to the market, fundamentals are still, interest rate differentials are still pointing up for dollar yen. Whether it can get back up to the levels we saw earlier, no one's entirely sure. The pattern this year has been that we've regained, wherever the intervention has come in, that they have been regained. The levels that they came in at have been regained within a matter of weeks and then superseded them, obviously, because we hit 40-year highs. So a lot of speculative longs will have been taken out as well in these moves, which was obviously the intention of the Bank of Japan. So where do we go from here? It will depend on how much more they want to do, how much more appetite there is for more intervention, and obviously the market's reaction. So as I said, we were just below 164 the figure. We're now below 158. We're around about 157.50 as I talk. That can change very quickly even while I'm doing this video. I'll take us over to the charts. We'll have a little look at the daily chart, and for once I'll bring us in the hourly chart as well, which is where I'm going to have a little look at how I define volatility and how the Bank of Japan defines volatility. They may be slightly different. So here we are on the daily charts, and it's a good way of showing you what was taking place before. So intervention earlier in the year. This is January. You can see these big moves down in dollar yen. This is the April move as well, down 2.38% for dollar yen. As you can see, but these are big moves on in terms of big figures. So the high there, 160.72. The low down to 155.54, and the low on the overall move, I think this was the second movement as well, down to 155.02. So notice 155.02 back in May on the intervention, 155.21. Some banks were calling it 155.20. So not too far off where they got it from down. And as I said, we've bounced here. This is the move on Thursday on the daily chart. That's down from a high of 163.73 to a low of 157.96. We did see a bounce during the day on Friday. and then further intervention came in and has taken us down, as I said, to those previous lows. Here we are on today's chart. It's relatively subdued so far in the Asian session, as you can see. Low at 157.15, high at 157.66. So still a 50-point range, but due to the extremities of the moves that we've seen, it looks like a much smaller chart. So that's where we're sitting at the moment. I've got technical levels in there, but clearly they kind of get blown out of the water. If the Bank of Japan, if any central bank's coming in and smashing the currency, everyone pulls orders until pretty much the momentum runs out. Then you'll start to see technical levels coming back in. So what we can call technical levels at the moment, I would say, would be probably the low that we've got around here. And as I've identified it, close to the low that we got back in May. Probably 155 is a bit of a target on the downside. Really top side, this is a former support trend line that's in there. That's kind of been taken out anyway. Top side now, we're looking back up towards that near 164 level. So what I mean, we're talking 163.80s there. It's pretty much the high was 163.98. That's a huge range to try and engage in. When you're trying to trade these, obviously it's going to move. We're seeing percentage moves in minutes, in hours. Capital management, risk management protocols do change for speculative traders because your parameters have to be so much. So if you were looking to, for instance, sell maybe against this recent high, you know you could have a very tight stop loss on this recent high or on this high, or then really the real ones above 164. Massive parameters. If you're buying, really your stop loss would be beneath these lows here, underneath 155. 20, you'd probably put it underneath 155, let's be honest. So huge moves, really flow driven at the moment, and it does depend on whether they come back in again. I'll just quickly whip you over to the hourly chart as well, just to give you a little clue on the kind of volatility we're seeing at the moment. So this is the hourly chart. As I was saying, the Bank of Japan come in, and as most central banks will, they'll tell you they're intervening to stop excessive volatility. Now, if you look here, this does not seem to be too volatile for me. We're seeing relatively, these are hourly charts, as I said. It's moving. It is moving higher, and it is a weakening yen. And the BoJ did say they're trying to stop the weakening yen, which we all know. It does appear they were probably around about this 164 level. But have a look at the volatility that we get, and this is where I kind of call a bit of BS on those guys. When we do, we get extreme volatility, and that is caused by the central bank. So, as I said, all the way down here in what, an hour and a bit, we've gone from a high at 162.95. We were originally up here near 163.65. The low within a couple of hours is down at 159.75. As I said, it came back in, but it's choppy in these markets. Here we've got extra moves down, and they're moving fairly far, like high 160.48. Low 158.60. They're massive moves. And then the extra move that comes down, as you can see here, bang. This was jawboning yesterday, confirming that we did get joint intervention from the Bank of Japan and the Fed. That took us down to these lows. And as you can see, the market's come back in, and it's kind of climbing back a bit higher. Where we go from here is anyone's game. If we do see them pull out and we don't see any further intervention for a while, expect the market to grind high. It'll be a nervous grind, let's be honest. Expect the market to grind high in line with the fundamentals that took us back up to these levels. If we get further selling, expect these levels to be challenged in short term, and we could see it even lower beneath that 155 level. So in conclusion, massive volatility in dollar yen, in euro yen, and in the yen crosses. Due to the action that we've seen, the dollar's come back off because mainly because of these massive moves in dollar yen. Where we go from here, only really the Bank of Japan and maybe the Fed can tell us. But as I said, if you're looking to trade these markets, massively reduce your capital or your capital management and risk management risk parameters, or increase your risk parameters, I should say. But good luck out there. If you need anything from us at ATFX, as always, if you haven't subscribed to our channel, in the link below, good luck trading, and thanks for tuning in.